Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 3:30 in New York. It is Tuesday, and this is the daily report for gold and silver. After 2 consecutive days of higher pricing, we do have gold trading down on the day, off about $5.5 at 1072 and change. The low 1072 and change, so we're right on the low right now, high 1080. So as you can see, we've really got a diminished range as we go into the Christmas holiday, which of course Christmas Eve begins tomorrow and will go on throughout an extended weekend because Christmas will be falling on Thursday of this week. Friday should pretty much be a non-event. We will not be doing a report unless there is really something that needs to be said. If we have activity, we will monitor, of course, but depending on the activity, we might choose to not do a report on Friday, just to give you a heads up. First chart I want to look at, very, very short-term chart, 60-minute chart. And what we're looking at on this chart is the fact that, well, first of all, let's look at our beginning of this would be the 21st right here. And so this is where we had this market actually have this large spike up, and we've absolutely got resistance roughly at 1080. We can draw a line across and you'll see this, of course, once again is very, very short term. Well, but we've already had a couple of occasions where we attempted to trade up to this point and a couple of occasions where we've actually traded above this point only to fall back down and to trade back below 1080. 1080, as you know, is a pretty critical level. It is a Fibonacci number that we have been looking at. So it's something we absolutely want to pay close attention to. So traders, the next chart that I do want to look at is a simple daily chart. In fact, let's go ahead and kind of enlarge this just a little bit. And on this daily chart, we can definitely see without a question of a doubt the kind of activity that we have seen in the marketplace itself. These are the most recent highs up at around, call it almost $1,200 per ounce. And this, of course, happened in the, call it, middle of October of this year. But really, since that point, since we hit that point, we have had a dramatic decline. And then we had this double bottom that came in. Now, the last low that we have seen in the marketplace, although it was below, call it 1050 here, it did, I believe, match up with this low, and at least for right now, there's absolutely no doubt, but we have some real support, call it at 1048, 1047 in that area. That is our definite level of support, but at the same time, 1080 is our current level of resistance. So traders, now that we effectively have a high and a low, we talked about both points just on the last segment, but this high up at around 1191, now we have these lows, they're coming in at around 1046. So we've got this spread between the low that we got over here and the most recent high that we got. And when we do that, of course, we can then ascertain some different Fibonacci levels. Now, let's assume for a second that in fact what we will see is this market actually finding some support and moving up. Now, I've not really gotten any kind of technical confirmation because the most we have really seen this market move up in a single day or in a single rally so far has been a 2-day rally here, a 2-day rally here. I guess you could call it a 2-day rally here. But aside from that, since this market has fallen, it's hard pressed to find, except for maybe here, it's hard pressed to find 2 consecutive days in which the market is trading higher. Now, that being said, we definitively have this 1191 as our high. We definitively have our lows sitting at 46 because we are well off the lows, trading at 73. And traders, here's where that 1080 comes in. As you can see, 1080 then comes in as a 23% retracement. Should, in fact, this market have the ability to track and trade above this, the next real level that we're looking at is going to be 1100 to 1103. If you recall, 1103 is an important fib level. Above that is not as important. It's a 50% retracement level, which I don't really put as much weight on for gold. I do for equities, but not for gold. And then 61 at 1136. So assuming And it is a big assumption, and we have no technical evidence of that as of yet. But if, in fact, we do see a rally, the first real level that we have to overcome, of course, is got to be this 1080. If it has the ability to overcome that, then we're going to see that I believe we'll find some real resistance at around 1100. As I said, going into the holidays right now, I absolutely want to remain flat, at least after this weekend, and then we'll see what kind of activity we have going in through the remainder of the year. This has been Gary Wagner, wishing you, as always, good trading. I want to wish all of those that celebrate Christmas a very Merry Christmas, and more importantly, I want to wish all of my subscribers goodwill and peace. Have a great day. Bye-bye.